Want to get up to speed on a company fast, you're definitely in the right place. Today, we're diving deep into Balrampur Chini Mills Limited, or BCML as they're known. You've got limited time, but you want to really grasp what makes this company tick.
Exactly. And BCML isn't just, your average sugar producer. They're a leading integrated player in India's sugar sector. And that word integrated, it's really key to their whole story.
It really is. Think of it less like just sugar and more like a whole system built around sugarcane from the field right up. So our goal today for you listening is basically to cut through all the noise. We've waded through their financial reports, the investor presentations, those long earnings calls, basically the works.
Right. So think of this as your shortcut, your rapid download to understanding what's critical about BCML right now, where they stand, where they're heading, and yeah, the challenges too.
Oh.
So let's start with that word again, integrated. What does it actually mean for how BCML operates?
Well, it means they've built this system to squeeze maximum value out of the entire sugarcane process. And they operate at a pretty significant scale. We're talking 10 sugar factories. That gives them the second largest crushing capacity in India, something like 80,000 tons of cane per day. That's massive.
It is huge, but the integration, it goes further, right? They have 5 distilleries. Total capacity there is 1,050 kiloliters per day. And importantly, it's fungible capacity, meaning they can switch feedstocks, use molasses, different grades, or sugarcane juice. Gives them flexibility.
Flexibility depending on rules and what's available, I guess.
Exactly. And then there's the cogeneration, 10 units. They can sell over 175 megawatts of power back to the grid. And they generate this using bagasse, that fibrous stuff left after crushing the cane.
Ah, so using the waste product. It's like a closed-loop system.
Pretty much. Using almost everything. It boosts efficiency, obviously, but also creates these extra revenue streams. It's smart.
A really efficient sort of self-sustaining setup around sugarcane. And they didn't start out this big, did they?
Oh, absolutely not. They started way back in 1975. Just a single small unit, 800 tons per day. Getting to this scale has taken decades. Strategic expansions, acquisitions, But here's where the story takes a really interesting turn now. They're not just sticking to sugar ethanol power.
Okay.
They're making a pretty significant leap into biospecialty chemicals. This is kind of a traditional agricultural player, really evolving.
Biospecialty chemicals. Okay, what are we talking about specifically?
We're talking polylactic acid, PLA. It's a biopolymer, basically made from plant-based sugars.
Yeah.
So it's renewable, biodegradable, an alternative to traditional plastics. And they're building India's first large-scale plant for it, aiming for 80,000 tons per annum capacity.
Wow, 80,000 tons. That sounds like a huge strategic shift.
It is. It's pivotal. The idea is to, reduce their reliance on those heavily regulated sugar and ethanol markets, and at the same time tap into this growing global demand for eco-friendly stuff. You can really see the shift from their traditional roots towards something new.
Okay, a major pivot towards green materials. Makes sense. Now let's look at the numbers. How did they do financially recently? FY25.
Right, FY25. Total revenue came in at Rs 5,415 crore. Their EBITDA, that's earnings before interest, taxes, depreciation, amortization, was Rs 704 crore, which works out to a margin of 13.0%.
13%. How does that compare?
Well, revenue's up, which is good, but that EBITDA margin, it's actually a bit lower than the previous year, and the main reason seems to be headwinds in their distillery business, particularly in the first 9 months of FY25.
Headwinds. Meaning those government restrictions on diverting sugar for ethanol?
Exactly. Those restrictions hit them. Though they do expect things to improve in the final quarter and looking into FY26. Profit after tax, the PA for the year, was Arsen 344 crore. So yeah, revenue growing, but short-term profitability took a bit of a knock.
Got it. And how did the different parts of the business contribute? Sugar versus distillery?
Sugar is still the biggest chunk, obviously. Brought in nearly Rs 4,900 crore. And that showed steady growth compared to both FY23 and FY24. The distillery segment, even with those restrictions, still contributed a fair bit Rs, 1,430 crore. Now, that was down from FY24 because of policy changes, yes, but it was still higher than FY23. So it shows the underlying potential there when things are, running normally.
Okay. And cash flow, always important. How did that look in FY25?
Actually, pretty decent recovery there. Positive operating cash flow of Rs 425 crore. That's much better than FY24. However, they also invested heavily. Over Rs 880 crore went into that big PLA project.
Right, that makes sense. Big investment.
Huge investment. So that hit their investing cash flow naturally. And to balance things out, they did raise some money through financing activities, about Rs 455 crore. So yeah, generating cash from operations, but also plowing a lot back into future growth, mainly PLA.
That PLA project just keeps coming up. It sounds
Yeah.
absolutely central. Let's dig into that a bit more. Why PLA? What's the real thinking behind such a massive investment?
Well, there are a few layers to it. First, like we touched on, it's strategic diversification, getting away from the unpredictability of sugar and ethanol regulations. Those policies can change. Second, it lines up really well with national goals, things like Make in India, Swachh Bharat Abhiyan, domestic manufacturing, sustainable alternatives.
Ticks those boxes.
Exactly. And crucially, they see a massive opportunity, this global market for eco-friendly alternatives to petroleum plastics. It's growing fast. So it's about managing risk, yes, but also about seizing a really big growth opportunity.
Makes sense. And what kind of financial impact are they actually hoping for from PLA?
The projections are quite ambitious. They're talking about annual revenue of around Rs 2,000 crore once it's fully up and running. And maybe even more interesting is the expected EBITDA margin, around 35%.
Wow, 35%. That's
Mhm.
significantly higher than their current overall margin.
Right. Puts it in perspective. It highlights just how much this could potentially boost their overall profitability. They're targeting Q3 of FY27 for commercial production to start. Yeah. And the global PLA market itself is forecast to grow at something like 18% CAGR. So the market's definitely there.
Okay, huge potential. Let's switch gears slightly. Ethanol. It's been such a hot topic for sugar companies in India. How does that fit into BCML's strategy?
Yeah. Ethanol's become really important for them. It's been contributing, what, 25% of their total revenue in the last few years. And they've invested strategically in those distilleries with the fungible capacity we mentioned.
Right, the ability to switch feedstocks.
Exactly. Molasses, different grades, juice, even grains potentially.
Yeah.
Depends on the rules and availability. Now, as we said, those restrictions on using sugar-based routes for ethanol, that did hurt profitability in the first 9 months of FY25.
No doubt about it.
But the long-term picture for ethanol still looks pretty strong, doesn't it, with the government's blending targets? Absolutely. The government's pushing hard. Yeah. 20% blending with petrol by 2025, aiming for 30% by 2030. That creates significant guaranteed demand for ethanol producers like DCML. Now, there have been some recent pressures on ethanol prices, it's true, but management seems hopeful they'll get back to a more stable pricing mechanism, maybe linked to the FRP.
FRP, that's the fair and remunerative price for sugarcane, right? The minimum price mills pay farmers.
Correct. Linking ethanol prices to the FRP could give them more predictability, potentially better margins. That's the hope, anyway.
Okay. And what about the core business, sugar itself? Are they just kind of letting that run, or are they still optimizing?
Oh, far from just letting it run. They're constantly looking to improve efficiency, boost production. They've expanded capacity over the years, both organically and through acquisitions. That's how they got to their current scale. And they're really focused now on cane availability and the recovery rate, how much sugar they actually get out of the cane.
How do they improve that?
Well, it involves working closely with farmers and also deliberately trying to rebalance the sugarcane varieties they use. They want to reduce reliance on one specific variety, Co 0238. It was high yielding, but it's become susceptible to pests and diseases. So they're actively managing that. And they actually expect higher sugar production in FY26, aiming for around 1 million tons.
Million tons, okay. And the cogeneration part. Using bagasse for power. How big a deal is that?
It's definitely more than just a nice little side benefit. By using bagasse for electricity, they cover a good chunk of their own energy needs, which cuts costs. Plus, they sell the surplus power back to the grid, so it's another revenue stream. It really shows that integrated model working, using every part of the sugarcane, maximizing resources.
Right. Okay. So putting it all together, operations, financials, strategy, how would you describe BCML's overall financial health right now?
I'd say they appear to be in a reasonably sound position. They've got strong credit ratings, India ratings, CRISIL, both give them good marks. Their net leverage, basically debt relative to earnings, actually got better in FY24. Now, they have taken on long-term debt specifically for that PLA project, that's clear. But the existing sugar and ethanol businesses, they carry less long-term debt. They did see short-term debt go up, yeah, but that's mainly for working capital. Pretty standard in the sugar industry, given the seasonality.
Seasonality, holding inventory. That makes sense.
Yeah.
And liquidity, cash on hand.
Seems adequate. Their working capital utilization is within comfortable limits. And their projected cash flows look like they should be enough to cover upcoming debt payments. So financially, fairly stable footing.
And what about shareholders? Have they been looked after?
Seems so. They have a pretty consistent track record of returning value. Dividends, share buybacks, Just in FY25, they paid out a decent dividend. And if you look back over the last, say, 8 years, they've done multiple share buybacks too. So yeah, shareholder returns seem to be a priority.
Okay, so solid base, clear growth plan with PLA. But every business has risks. What are the main challenges or potential bumps in the road for BCML?
Yeah, definitely risks to consider. First off, the obvious one, agriculture. They depend on sugarcane, so they're exposed to agro-climatic risks, weather, drought, pests. These can hit yields and quality hard. We're already hearing about potential declines in India's overall sugar output this season because of exactly these kinds of issues.
Right, the weather factor. And you mentioned regulations earlier. That seems like a big one for sugar and ethanol.
Huge. It's a notoriously complex area. Government policies touch everything. Sugarcane pricing, you've got the central FRP, but also state-advised prices, SAP, in states like UP. Then there's the minimum selling price for sugar itself, ethanol pricing, rules about diverting cane or juice for ethanol, export quotas, stock limits. All these levers can be pulled by the government and can significantly impact profitability and how they operate.
Can you give an example of how that plays out?
Sure, like the central government recently increased the FRP for sugarcane, but Uttar Pradesh, where BCML has a lot of its operations, didn't increase its SAP. So that potentially squeezes margins for mills in UP compared to maybe other regions, or, like we discussed, the restrictions and lack of price increases for some ethanol routes definitely put pressure on their distillery margins recently. It's constant navigation.
And the PLA project itself, huge potential, but surely it comes with its own risks too.
Oh, absolutely. Any big new industrial project has execution risk. Can they build it on time, on budget, get it running smoothly? Ramp up risk. They're entering a relatively new chemical segment for them. There's technology involved, and then there's market penetration. Okay, demand for PLA is growing, but right now it is generally pricier than traditional single-use plastics.
So adoption might depend on other factors.
Yeah, things like government policies really pushing the ban on single-use plastics will be pretty crucial. They need that policy support to help drive widespread adoption and create a really robust market for their PLA. It's not just about making it, they need to sell it effectively.
Okay, quite a few risks to navigate then. So faced with all that, what are BCML's core strengths, their competitive advantages?
Well, number one has to be that integrated model we keep coming back to. Efficient byproduct use, better overall profitability. That's key. Second, their sheer scale and leading market position, especially in Uttar Pradesh, that gives them a strong base. Third, their proactive work on cane management, trying to secure better quality and quantity of sugar cane. That's vital. And finally, specifically with PLA, being the first large-scale domestic player gives them a really valuable first-mover advantage in India.
Makes sense. So looking ahead, summing up the growth story, what's the main narrative? What should we be watching?
The primary growth engine, without a doubt, is PLA. If they execute that project well and capture a good chunk of this emerging bioplastics market in India, it could genuinely transform the company's growth path and profitability. That's the big story. Alongside that, expect continued, steady performance and optimization in the existing sugar and ethanol businesses. These are still supported by government policies pushing biomanufacturing and renewables. Things like the BioE3 policy offer specific incentives that help projects like their PLA plant.
Okay. Now, the million-dollar question, or maybe the rupee question, valuation. For anyone listening, maybe thinking about investing, what can we actually say about BCML's valuation based on the sources we looked at?
Yeah, that's a really important point to be clear on. While all the stuff we've discussed, operations, financials, strategy, comes from their reports and calls, those sources don't give us current valuation multiples. They don't provide a specific fair value estimate for the stock price.
So we know the business, but not if the price is right.
Exactly. To figure that out, you'd need more analysis. You'd need to look at historical trading multiples, compare them to peers in sugar, ethanol, maybe even bioplastics. You'd need detailed financial projections, future earnings, cash flows, CapEx plans, and assess their cost of capital. So while we've got a solid grip on the company itself from these documents, the valuation piece requires that extra layer of financial digging.
Right. Crystal clear. Okay, let's try and wrap this up then. What are the absolute key takeaways for you listening to this deep dive on Balrampur Chini Mills?
Okay, takeaway one. BCML is a major integrated player in Indian sugar with strong footholds in ethanol and power cogen. Integration is key to their efficiency. Takeaway two. Their big strategic push into polylactic acid, PLA, is potentially game-changing. It's about diversification and tapping into the high-growth, sustainable materials market.
And financial.
Financially, they look pretty stable right now. strong credit ratings. Yes, the PLA investment means more debt in the short term, but the plan is clearly to pay that down once the plant starts earning. And it's a big but. Always remember the context. Agro-climatic risks are real. Regulatory risks in sugar and ethanol are constant. And that big PLA venture, success isn't guaranteed. There are execution risks, market adoption risks.
So lots of potential, especially with that PLA move, but definitely not a risk-free bet.
Precisely. Which leads nicely to a final thought, or maybe a question for you to ponder. How might future shifts in India's regulatory landscape, think sugar pricing, ethanol rules, plastic bans, how might those shifts specifically impact BCML's different businesses? Sugar, ethanol, and this new bioplastics leg. And maybe think bigger picture, too. What are the long-term implications when a traditional agricultural giant like BCML starts moving seriously into innovative biomanufacturing? What does that mean for them and for industry in India more broadly?
Yeah. That intersection of old school agriculture and cutting edge bio innovation, it's very fascinating. Lots to think about there. Thanks for joining us for this deep dive.